As COVID-19 cases continue to mount and we effectively shut the door on any possible stimulus before the election, we saw another day of selling here in the United States, where we saw the S&P 500 down about 0.3%. In fact, we have bearish postures on 3 out of our 4 market indices. The fourth one, the Russell 2000, actually has a bullish intermediate confirmation signal. So we'll talk about all of that. We'll then get into our trade application example, where I focus on one of the largest technology companies on the planet for a bullish trade setup right before their earnings announcement. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 27th, 2020. For those of you that are new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, go down to our description area, and sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. Lastly, we do have a presence on Facebook as well. Feel free to join our group at the web address you see embedded in that logo in front of you. All right, let's go ahead and jump into our charts here. And as you can see, I've got chart 4B pulled up here in front of us. This is a 4 grid of the 4 major U.S. equity indices. We've got the S&P 500 in the upper left, Dow Jones in the upper right, NASDAQ Composite lower left, and Russell 2000 in the lower right. Now, one of the bigger stories today is that this was kind of one of those technology-oriented days. You'll notice here that the NASDAQ Composite was actually up here today. It was up 0.64%. Notice that the S&P 500 was down 0.3%, like I mentioned in the intro. The Dow Jones Industrial Average fared fairly poorly today. It was down 0.8% and continued that 3-day slide that it's on here. And you can see that the Russell 2000 was down 0.9%. So the NASDAQ was not only the only one that didn't finish in the red, but it was actually a pretty decent gain, all things considered, over 0.5% to the upside. So today was one of those days where a lot of those software stocks, those work from home stocks, started working pretty nicely again. As an example here, we look at Zoom Video. It was up 4% here today, so a pretty strong showing there. DocuSign was also up 1%, so some of those kind of coronavirus plays, as it were. Now, if you look at Microsoft, they reported earnings just after the bell here tonight, and the stock is basically treading water. It's down $1, which on a $213 stock, that's not really a big movement in either direction there. But just be aware of it. Folks might be talking about that as we head into tomorrow's open right there. But during the day, we actually had some positive movement into those tech-oriented names. Now you'll notice that the background colors of 3 of our charts are red, telling us that we have a weekly bearish posture on the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite. Something else of note is the S&P 500 now has a red 30-day moving average. In other words, price closed below a falling moving average, and that is brand new as of tonight's close. It's basically following in the footsteps of the Dow Jones Industrial Average, which already had that particular situation yesterday. Note that the moving averages, in this case the 30-day moving averages, are still green on the NASDAQ Composite and on the Russell 2000 because price is still above a rising 30-day moving average in those cases. Now, I mentioned this in the intro, but I should identify it here as well. The Russell 2000, the chart in the lower right-hand corner here, actually finished with what's known as a bullish intermediate confirmation signal, and just barely. Remember, there's 2 different pieces to that signal. The first step that you have to identify is the green line considered bullish at this moment in time? That's our intermediate line. And remember, on the market forecast technical indicator, the upper reversal zone is at 80. So in the label here, you can see what the current reading is. It's at 82.7 and falling. Now, as long as it's in the upper reversal zone, doesn't really matter if it's falling or rising. We consider that strongly bullish. If it falls out of the upper reversal zone, that's a different story, as has been the case with the other three indices. So not a great sign that we're falling and getting closer to 80, but at this point we would still consider it strongly bullish, which is why the background color of that particular chart is still that dark green shade, and it's the only one that is exhibiting that because that's our kind of our leader in this market right now. So that's step number one, identify a bullish intermediate posture. Step number two is what's going on with the red momentum line. And in this case, again, you can read the label over here if it's easier for your eyes to see what the current reading on the momentum line is. And right now it's at 6.99 and falling. Now on the downside, the lower reversal zone on the market forecast technical indicator is 20. So as long as the red line is below 20, at the same time that the green line is considered bullish, that equates to a bullish intermediate confirmation signal. Now you've probably also heard us mention that we like to see the blue line between 20 and 50 in an ideal world. Sometimes that happens, sometimes it doesn't. This is a case where it did happen, but just barely. You can see that the blue line is at 20.27. In other words, it's 0.27 points above the lower reversal zone there. If that would have been 19.9, we would not have considered that a more ideal setup. But as it stands, it is considered one of those more ideal setups with the blue line between 20 and 50 right here as well. The other thing that I would point out is that if you look at the chart of the Russell 2000, let me right click and go to maximize sell here so we can see this a little bit better. And I'm going to get a drawn item out and let's just use a price level here. I want to show you that there's a pretty decent level of support right where we are trading right now and basically at yesterday's low as well, which represents the concept of old resistance becoming new support. Now, just like any technical indicator, it doesn't mean that that has to work every single time. In fact, I can assure you that it doesn't work every single time. But it does exist, and it is worth at least paying attention to right here. Again, one of the things that I've been sharing with you, and I'm sure David has as well in recent weeks, is that we've all of a sudden seen the Russell 2000 take a leadership role in this market. And so if you are looking to play the markets bullishly, then maybe this is a chart that will help kind of solidify your mindset from that perspective, because you can see back here on August 11th and then again here on September 2nd, we kind of had this double top formation. We eventually blasted through that. So this is one of those breakout retests. We're at the retest zone right now. So what you're looking for is a bounce up and off of that blue line that you see right there, which is effectively where we closed today. So we're in an important congestion zone as it stands right now. All right, real quick here as well, let me pop on over to the internet. And I wanted to say thank you to those of you that clicked like for me the last time on Twitter that I did this video, which would have been on Thursday's video. 102 of you clicked like, and you know that I like those triple digits, so thank you for doing that. Remember, that is the best way that you can thank David and I for doing these videos for free for you every single day, is to support us on social media. In particular, we generally follow Twitter a bit more so than some of the other social media platforms. So if you do want to see David and I continue these videos for free every day, that's the one way that you can urge us to do that. Thank you to those of you that commit to doing that nearly every single day. We certainly appreciate that. It helps us get the word out to a larger audience than we would be able to on our own about our premium business called Market Scholars. And speaking of which, I did teach a premium class earlier today. So for those of you that are premium members, remember you can click on the Trading Rooms tab here. And then if you come down to the 27th of October, which was today, you'll see that my dividend growth investing class has been recorded. WebEx was nice and got me the file back nice and early today, so it's already posted to the calendar. But the reason I'm pointing this out specifically right now is I spent a fair amount of time, maybe 15 to 20 minutes within that particular class today, explaining a new feature on our dividend stair-step chart. So if you're somebody that is using those dividend stair-step charts, but you didn't get a chance to attend the class live today, I would encourage you to go and watch the recording. Basically, the new dividend stair-step charts are now going to allow for us to see the overbought and oversold zones on non-standard dividend payers as well. So for instance, Realty Income is a non-standard dividend paying company, and this is one that pays a dividend every month as opposed to every quarter. So it used to be hard for us to get a sense of things with the way that the think scripting worked here, the programming language that we're using. But now we do have a way where the blue lines and the orange lines are accurate for those non-standard dividend payers. In other words, the monthly payers, the semi-annual payers, and the annual payers. Again, for those of you that are premium members or even plus members, you're invited to go back and watch that recording from my dividend growth investing class earlier today. Anyway, let's keep on tracking along here. One thing I did want to point out is that I noticed that the momentum stocks were kind of back a little bit today. Don't want to make too much of it, but as I mentioned earlier, Zoom and DocuSign and a few of those were doing a little bit better today. You'll notice that on chart 3D here, we've got the momentum factor in the upper right-hand corner, and it was up 0.21% today. Now, that's not a big number in absolute terms, but on a relative basis, you'll notice it did quite well because the other 5 factors all finished in the red. So we had the dividend yield factor down 1.59% today. We had low volatility factor down 0.42% today. We had the quality factor down 0.49% today. Size factor down 1.01% today. And the value factor was down 1.66% today. So in other words, momentum was the only one of the 6 factors that finished in the green here today. Additionally, if you come over here to the Market Watch tab, and let's go to Visualize, and let's go to Index Watch, and then I'm going to pull up the S&P 500. You'll notice that it was a pretty bad day for the S&P 500. Out of the 500 stocks on the S&P 500, 382 of them finished in the red today. So I know that the averages didn't look all that terrible when it was all said and done. Remember, the S&P 500 was only down 0.3%. So not a big day at all, 30 basis points. But if you kind of peel back the curtain a little bit, you will see that it was maybe a little bit uglier than what was suggested in the end. You did have a lot of the FANG names, by the way, closing higher here today. So if I were to pull up, let's just pull up chart 4A real quick and take a peek at those FANG names. Facebook starts us off. Notice that Facebook was up 2% here today. Let's take a look at Amazon. It was up 2.5% today. In fact, a really nice little bounce off that 30-day moving average right before the earnings announcement for Amazon right there. Apple was also up. It was up 1.35% here today. And Netflix was up, not as much as the others, but it was still up 0.14% today. And then last but not least, we do have Google, or Alphabet, and it was up 0.87%. So again, keep that in the back of your mind. The market was down today. All FANG stocks were up. Because FANG is such an important and influential group from a market cap basis on the overall indices, it kind of masks the fact that today's trading was a lot weaker than it might have appeared to the naked eye, where we did see 382 of the 500 stocks in the S&P 500 finish lower. So not a great day when it was all said and done, unless you were specifically focused on kind of the high-tech area of the market. All right, let's go ahead and take a look at a few more charts here. I'm going to take a look at 3 green arrows chart now. All right, now this is chart 4D, and the background colors of these charts will tell you whether we have 3 green arrows, 3 red arrows, or a mix of green and red arrows. And as you can see, the background color on the S&P 500 and on the Dow Jones Industrial Average are both red at this moment in time, telling us that we do have 3 red arrow signals on the S&P 500 and the Dow Jones Industrial Average. With the NASDAQ Composite and the Russell 2000, it's a mix, and that's why the background color is white right now. And the reason for that is what I mentioned earlier, which is we still have price above the moving average in both of those charts cases. with the S&P 500 and the Dow Jones, we saw both of those fall below their moving averages in the last 2 sessions, and we already had red arrows on the MACD histogram and on stochastics. Now, some folks might take that a little bit too far and say, well, if we've got 3 red arrows, does this mean we're in a strong downward trending market environment? And the answer to that is not really. Yeah, there's been market pressure here recently, but if you look at the charts, you're not going to be making aggressive bearish trend trades at this moment in time in all likelihood. You're still trading well above where you were trading just 3 months ago in most of these charts cases. So a little bit of shorter term turbulence that we're dealing with here, but I don't think it's necessarily trend changing yet. And could it change in the future? Of course. We'll see what happens with the election and other corporate earnings announcements that come out. And if that's what the markets need to do in the future, then they need to do it. And we'll, of course, be with you here every step of the way. Again, assuming you guys are supporting us on social media and we continue to do these videos, we'll be here, identifying those trend changes as they are established in the days to come. All right, let's go ahead and take a look here on our 1040 crossover method now. And you can see here that all of our charts have the green background color here. Now, a reminder, I know most of you have watched this video plenty of times in the past, but just to remind ourselves that there are always brand new folks that are watching these videos as well. This chart 4C is a little different than the other charts that we looked at in that these are longer term charts. These are 3 years in length. Each one of the candles is 1 week in length. And so it kind of gives us a sense of not just what's happening right here, right now, but what has happened over a longer period of time. Sometimes people will use this 1040 crossover method as a way to kind of establish their posture for their 401ks as an example, where they can't really actively trade. They can just make a few moves every so often. So here you will see that as it stands right now, the orange line is above the blue line in every one of these 4 charts, telling us that the 10-week moving average is above the 40-week moving average, and therefore we have more price pressure that would be considered bullish here in recent weeks and months, and is going up at a rate faster than the less sensitive moving average, in this case of the 40-period moving average. So not a whole lot to discuss there, because remember, these are not charts that will give you a whole lot of posture changes very often, but more than anything, just a confirmation of where we're at right now. Yes, the last couple of days has maybe felt a little bit heavy, but let's remind ourselves that we are still largely in longer-term bullish markets at this exact moment in time. All right, let's go ahead and do some 12 grid analysis now, starting with chart 5A. All right, so this is our asset class 12 grid, and this will give us a general sense of whether we are seeing trend continuations or reversals that we want to know about. And the background colors of these 12 grids will tell us whether the postures are currently considered bullish or bearish according to the market forecast technical indicator, specifically the intermediate line. Now, the first thing that catches my eye is foreign bonds. Those of you that have been listening to me on prior Tuesdays and Thursdays know that I've been talking about this trend in foreign bonds. And I said, if you're going to be dabbling in the bond market right now, the foreign bond market looks to be the one that is preserving your capital the best at this moment in time. We had another nice day out of foreign bonds here today. I'm looking at this chart kind of in the middle. This is ticker symbol BNDX. And you can see a nice bounce up and off of that rising 30-day moving average there for foreign bonds. And we're getting close to breaking out above that prior high that we set about a week and a half ago. So we're going to keep our eye on that trend. Now, likewise, you'll notice that with those 3 days of rallying in the foreign bond market, we also had 3 days of rallying in the TLT. Remember last week I mentioned that oversold cluster signal, and I said, don't be surprised if we get some sort of a reversion to the mean type of a move here. And that's, of course, exactly what has happened. So for those of you that were brave enough to get bullish long-term treasuries on that oversold cluster signal, congratulations, you just had a pretty decent move for yourself. Now the question is, where does it take you from here? And that's where I may have some caution, because of course you can see the background color of the TLT chart there is still red, telling us that we have a bearish intermediate posture, and the moving average itself is also red, telling us that price is below a falling moving average. You'll see that the last time we had a reversion to the mean type of a move, we kissed that moving average and we bounced back down, hitting new multi-month lows there. So could that be in store again here? I think it's entirely possible. Part of the reason behind that mindset is you'll see this chart in the lower right-hand corner here. This is TNX. This will be a way for you to see what is the interest rate on the 10-year U.S. Treasury. And if you move that decimal point over to the left one, it basically tells you that right now the interest rate is 0.77%. Now, when you look at the chart, that's a beautiful chart. I wish it wasn't an interest rate chart. I wish it was a stock chart. I would be highly interested in trading that. I like the formation that it's got right now. It is gradually eking its way higher with a nice steady set of higher highs and higher lows. We've just had 3 candles to the downside telling us that interest rates have fallen for 3 straight days at the same time that bond prices have risen for 3 straight days. And then the same question, where do we go from here? Do we continue to break down from here? I think if you took the interest rate label off of here and replaced this with some random stock symbol, a lot of you would probably be looking at this and saying, yeah, I'm ready to gear up for our next leg higher on this particular chart, waiting for some sort of a bounce around that rising 30-day moving average, just like we saw back here on October 15th. So be on the lookout for that possibility with interest rates going forward. And of course, the opposite mindset is also true, a bearish bounce down for bond prices themselves. In terms of other charts that catch my eye, Reits had a pretty ugly day. Reits struggle for a lot of reasons. Right now their dividend payments are in jeopardy in many cases because rent is not being made in some cases. Now, it's not nearly as bad as it was back in March and April, but there are still a lot of struggles from a landlord perspective, and that's coming back to haunt many of those REITs. As it stands right now, we see a pretty big breakdown here away from that 30-day moving average on VNQ, which is the Vanguard version of the REIT ETF right there. So REIT's not a great place to be hanging out at this moment in time. I would also point out that EFA had a pretty ugly breakdown. EFA represents foreign stocks from a developed markets perspective. So think about Europe, Japan, Australia, that sort of thing. And, last week when I was with you, I had pointed out that, of the foreign markets, I felt like the emerging markets were vastly superior. I was mentioning that we were on the verge of breaking out to multi-month highs on EEM at the same time when we were a long ways away from multi-month highs on EFA. So that relationship is still holding true here today. Those of you that would have done a pairs trade where you're buying emerging market stocks and short selling developed foreign stocks would have made a pretty good margin in just the last few days. Again, pretty ugly move right there, down and away from a falling 30-day moving average in the case of EFA, whereas EEM is retaining value at a reasonable rate. I've noticed a few Chinese companies, as just one example, that have held up a little bit better. So for example, let's pull up Baidu. Baidu looks pretty solid there. Of course, big internet search giant in China. Alibaba, ticker symbol BABA. Look at it's breaking to new highs. If you pulled up Tencent, it's also breaking to new highs. So don't sleep on China right now. China's starting to see some breakouts here and there, especially in the tech-oriented space. All right, let's go ahead and take a look at our next set of 12 grids, which will be the primary stocks, or the global stocks primary 12 grid, I should say. And this one gives us a sense of, where do we see strength? And let's start with China up here at the top, because I was just talking about it a moment ago from kind of the broader perspective with the emerging markets. Now we're going to kind of drill down into the next level, into a country-specific level. And you'll notice that China is one of the only ones that is green on the board right now. In fact, this layout right here kind of reminds me of Connect 4, but let's call it Connect 3, because we have our 3 green charts kind of going diagonally right down the board from one another. So we got China, We have India and we have South Korea as the green charts on the board that are retaining their value much better than the other areas across the globe. And remember that China and India in particular are part of what is supporting EEM. Remember, some folks will refer to the acronym BRIC, standing for Brazil, Russia, India, and China. Well, if we look at the other two, Russia down below looks terrible. They're about ready to break down to multi-month lows. And Brazil looks a little bit better than Russia, but not much better. It's still in a downtrend. So really, you can kind of peg the EEM strength squarely on the shoulders of China and India. They are carrying the load for the emerging markets right now. A lot of these other charts around the globe do not look very appetizing at all. Japan's okay. They're hanging in there around their 30-day moving average. But a lot of these other charts are breaking down. In particular, I don't know if a lot of people are talking about this, but Germany looks terrible. Germany in the upper right-hand corner here, breaking down to multi-month lows, and it is launching down significantly below its 30-day moving average. You can see that the United Kingdom is not quite as bad as Germany, but still looks pretty bad. That's a downward bearish trend that we're dealing with right there. Same thing could be said for Italy and with France. Of course, France and other European nations been in the news here recently because of the coronavirus and what that means from an economic lockdown perspective. We do see that Canada is kind of hanging in there okay in comparison, but still doesn't look great. So right now, if you're looking for strength around the globe, you're kind of looking at China and India, along with maybe a little bit of South Korea as your go-to places. Otherwise, it's pretty dicey out there, and you kind of have to tread cautiously in this particular market environment. All right, let's get into our trade application example here today. And this will be a little bit of a strange trade for me. Most of you know that I don't generally do trades immediately before an earnings announcement. And if I do, they're usually longer term trades where I know that I'm going to be holding a security for a long period of time. So if I have to hold it through one earnings announcement, I'm going to be holding it through 40 of them. This was a rare example where I did a short-term trade, but it was on a stock that had an interesting enough setup where I felt like it would be worth to at least roll the dice and see how it goes. Now, truth be told, I actually wanted to do a bearish trade on KSU. This is Kansas City Southern. So for those of you that are working your orders a little bit longer than I am, you might find some bearish trade setups there in KSU. I tried to float some trade ideas or I placed some trades out there, bearish trades on KSU, but I was not getting filled. And so I opted in the end, rather than to force the trade through, to just pick a different underlying security. So what I did instead was I flipped it around, and rather than going bearish on KSU, I went bullish on Apple. Now, I might find out very soon whether I will end up regretting that, because as you can see, Apple does have their earnings announcement coming up here in just 2 days. Remember, Microsoft just reported theirs after hours, and so far it hasn't melted down, it hasn't gone up a whole bunch. And if that happens to Apple, I'll be in okay shape. What I chose to do was to sell a bull put spread. And of course, I did this trade during the market session, and so I've already sent out the trade alerts to those of you that are premium members of Market Scholars through our Telegram app. So feel free to check the Telegram trade alerts for the exact levels and fill prices and things like that I shared with you earlier today. But basically, what I did was I focused on the November monthly contracts, and I sold the 110 put, which is about at this level right here. And I bought the 107.50 put, which is right about here. And when you do that, when you're selling one contract, buying another, you're either going to create a debit or a credit. In this case, I created a credit, selling that bull put credit spread there, where the goal is for the stock to either go sideways, go up, or if it's going to come down, just come down a little bit, right? If I've sold the 110 strike, then I don't want Apple to fall more than $6.60 from where we're trading right now as we go forward. And of course, that comes with risk. It is entirely possible that Apple misses the number and they gap down on their earnings announcement. If that happens, that's the whole point of me having a bought put embedded in my trade. Remember, when you're doing a bull put spread, you're selling one put and you're buying another. That bought put is effectively acting as a hedge. So if it does gap down and goes well below 107.50, then I am protected beyond that level. So I am going into this with a defined risk mentality. Yes, it can be considered risky to place a trade immediately before an earnings announcement, but as long as you know what your worst case outcome is and you're comfortable with that possibility, then it might still be worth it for you to explore it. Now, part of the reason I was interested in this is we did have what was known as a Kaholt pattern right here, with yesterday being the low day. Today we closed a little bit above the high. So for those of you that have never heard of Kaholt before, it's basically an acronym, stands for close above the high of the low day. This is the low day. Today we closed above the high of that low day. Yesterday's high was 116.55. Today we finished a whopping 5 cents higher than that, but technically it does qualify under a Kaholt pattern. And you will see that the moving average color changed back to green to help support the thesis there as well. And in addition to that, there is a bit of a bullish near-term divergence that's taking place. Notice down below we have a blue line that's kind of troughing out here in the lower reversal zone on October 19th. It then goes up and has a higher low on October 23rd. Now the two candles that are associated with that up above are this big candle right here and then this candle right here. So you can see price went down at a time that the indicator strengthened. And that is known as a divergence right there. Now you can probably throw that out the window considering what's going to happen here with earnings coming up, but at least there is some sort of a technical reason behind placing a trade like this. So we'll see how it goes. Worst case scenario, if it doesn't work out for me, I know what my risk is going into it, and if it does work, great. You know, at least we can say that we placed a trade in a relatively strong stock here today, as Apple was up over 1% on a day when the S&P 500 finished in the red. So that's what I had for you here today. I hope you got value out of tonight's video. Hopefully you learned a few things. Maybe you found out that foreign bonds were an interesting trend trade. Perhaps you learned that China and India were leading the world in terms of equity performance here recently. Whatever it was that you gained from this video, if you could do me a favor and click like for me there on Twitter, that would go a long ways there for us here at Market Scholars. Thank you so much. David will be back with you tomorrow, and then I'll see you all on Thursday. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.